Hi Rima, I was wondering if you can tell me more about family guarantee loans.
Family guarantee loans. Okay, I think I have to draw something on the board if that's okay with you, yeah?
No worries.
Okay, let me just get the... So do you want to come in?
Sure.
I'll explain how family guarantee loans work.
Mhm.
So family guarantee loans are designed to save you lender's mortgage insurance fee. Let's say you want to buy a property and the property is worth say 1 million.
Mhm.
Your parents have a property here in Australia and they've got some equity sitting in there. So if your borrowing capacity is good enough, you don't have to pay LMI. So the way it works is like this.
Mhm.
So you've got your property.
Yep.
Your mom and dad, they've got their property, right? Okay, so this is, let's say, you, and this is mom and dad, right? Okay, so this property is worth, say, 1 million. That's the value. This is your property, so you need 1 million to buy this property plus the cost, isn't it?
Yep.
Plus cost meaning your stamp duty and etc. etc. So let's say around 4% stamp duty plus other miscellaneous costs, maybe 3,000 for the solicitor and all the jazz, yeah? Okay, so you need close to 1 million, say 45,000. Okay. Now, mom and dad, they've got a property and their value is also 1 million. And assuming this is the best case scenario, is that they've paid off their loan, like it's unencumbered, yeah? So now, which means that they've got full 80% equity sitting in there. Although you don't want 80%, all you need is 20%, because you can borrow 80% against your own property. So your loan, let's say 80%, and your loan here, when I say your loan, because you have to service this 80% plus the 20% and the cost.
Yep.
So your loan is divided into two portions. That this is 20% plus the cost, right? I'm just giving you a very brief description. Yeah, there's plenty of it. Otherwise, like mom and dad's property should not be actually owner occupied. Normally, banks don't prefer owner occupied, but it can be. Plus, your property should not be a second investment property. Maybe one investment they can do. Ideally, this is designed for first home buyers, you know, for children to avoid the LMI and for mom and dad to help their children to buy their first property. But there are certain banks who can even help you buy investment property, but just the first one, not the second one. And mom and dad's property, ideally, it should be an investment property. But there are banks who can do owner occupied as well, yeah, because the idea is that they don't want to put too much pressure on mom and dad if they've already retired, and you know, if they're giving you the property for buying your property, right?
Okay.
So now the thing is that we have to take these two properties to one lender. If mom and dad, they already have a loan, let's say even 20,000 sitting in there, then we bring your property over to them, or their property over to a new lender where we keep your property as well. So these properties have to sit under one umbrella.
Oh, all right. Okay.
Yeah, there are banks who can do second mortgage as well, but that's a little bit complicated. So I'm giving you a very brief description on it. So this way, the advantages are when you're buying a property, you can obviously save LMI. You don't have to pay LMI because you're borrowing 100% against the equity of that property. So the bank where we are taking these two properties, they've got assets worth 2 million. 1 million from your property, the other one from mom and dad. So against that, they can go up to 80% of that, 20% plus the cost of mom and dad.
Oh, okay.
So that's just in a nutshell. That's about family guarantee loans.
All right.